So we're going to go back over and look at what happened last week and see how that was to compare how we performed really. So I'm going to start upon the monthly time frame for the US dollar. In here, you'll see this fair value gap. So fair value gap there. Now we've come into this fair value gap. So that's quite a significant move into there. However, if we go into the weekly, you'll see that on the weekly time frame, we've actually already got part of this fair value gap on the weekly filled in. So if I just overlap this from there to there, that's the weekly level. But we filled into here, and we've also filled into there. We'll leave that the way it is actually. So there is still this area up in here. So I mean, this is a pretty big reaction out of that area. I'm going to flick back up to the monthly. So you'll see we've actually got this bullish fair value gap in here, the monthly. So I'm going to change that to bull. We've came down into here. The thing that was quite interesting for me on the weekly was this came down in here and we didn't get a close through 50% of that. So if I just double click this actually and put the middle line on, there's the middle line. You'll see we came down towards that area, but we closed back in the top half of that. So I would like to watch this week and see how we play, because this was quite a significant move. And as I look at this here, a level that I would be looking at would be 50%, which is consequent encroachment of this wick, the tail. So if I just take this here, come down, set it to 0.5, and if I come down to the daily, you'll see that it comes into this area here. So we've got just this fair value gap that's going to form. When we open up tomorrow, we'll be looking at this level. So for this week, although we broke structure down here, it looks very bearish. I'm going to sway towards the monthly. So what I'm going to be watching for this week is how we react. So there'll probably be some form of retracement. What I would like to probably see is in here. So this is the weekly low. So if I just take this, I'll mark that out. That's the weekly low in there. So if I go down to the daily, it would be interesting to see if before we trace back up into here, we perhaps run that low. Maybe we come down here, we make a new low, and then we retrace back up into this sort of area. And then perhaps from this area, I would be looking to see what we do. So as I said, if we start closing back above this area next week, then I would be anticipating these levels above to be taken. If we come down here, if we come up at this area and we start to show weakness again, then there's a chance that we're coming in much lower. So we know that on the weekly, we're way down here for the weekly. So do we come that far? We need to wait and see. It's a bit far in advance. There is a really small fair value gap just in here. Don't know if I'll mark that. So here's another one. I'm going to put this as just a standard fair value gap. And in actual fact, that's quite interesting, that one. We'll make that there. So that's a daily. Sorry, that's a weekly. Text. Black. That. This is monthly. So, as we look at so last week I was expecting or anticipating, not expecting, we don't expect anything, we try to anticipate price. So I was thinking we were going to come down, and then the news, I expected this candle to be the opposite direction. So that magnitude, but in the opposite direction to take us up into this weekly. It's a weekly, and this is the monthly. But that's not to be. So this is a really strong reaction. So we need to wait and see how the markets open, how we react on Monday, or this evening when it opens. But from a monthly perspective, we've now came lower. Our initial movement has been a move to the downside from the monthly open, which was here. So if you think about the power of three, open, high, low, close, open, low, high, close, then we could be in the midst of creating a low for the whole month, and then we start to see things move back up into this area maybe. But I would say the reaction out of here is quite strong, so I need to wait and see how we play this one. I'll not bother marking up this just yet, but that's something to keep an eye on further down the line as well, potentially. What else? We'll come down into the daily. So I just want to see how it reacts in this monthly fair value gap. We'll see. This is quite interesting to me now that I've seen this. So a daily level, so it's quite significant. Sorry, a weekly level, so it is quite significant. And do we come down, trade into this area, and then go? From a weekly perspective, as this week goes, as next week goes, as soon as we start getting weekly candles closing below here, the middle of this fair value gap, then I think there's potential for further downside. But we'll play it level by level. We'll see how it goes. We don't marry a bias, even though I didn't get the direction I wanted last week. I still had a trade on Monday, 3R. So it's just a matter of being nimble, allowing yourself to be open to the market, not doing what you anticipate, but all the same still holding a bias, because you need to have that initial bias. Potentially up in here, so it could either be, once we hit this level, we could be up, or we could then come down again. So this is a level I would like to see traded to, and then we'll see how things go. I don't think there's much else in there just now, so it's going to be much and such the same for, we'll go up to the monthly. So we'll see just the opposite. So if we look in here, we're starting to make a turn to come down here. We've traveled back up, so from the monthly perspective, we've got this little wick tail, we've got this big move up, but there's a chance that this is just coming back in to rebalance this fair value gap, and then we continued down. And when I say continue down, it's to continue down into this monthly fair value gap here. That would be bullish as well, so we'll change that first. We'll put the middle line on here as well. Make that black. Change that to monthly. Then put this one, so this is a bearish fair value gap in here. Also, I'll put the middle line on this one just to show that, again, on Friday's close, I was watching to see where it closed because I wanted to see it close in the bottom portion, the bottom half of this. So if I go down into the daily, just straight after there, look at this. So we wicked above the 50%, but we closed below. So to me, for me, that still gives me, if we'd closed above there, then I would have been saying, no, my bias is now we're definitely going higher. But we've come up into this monthly level. We've respected the consequent encroachment of this fair value gap. So for next week, really, what I would like to see is Monday, Tuesday, a move up here higher, maybe fill in the hole of the fair value gap. And then I would like to see us kind of roll over. So next week, there's not any news until Wednesday, Thursday, Friday. So again, this might be a week where I only trade once the market showed its hand. So probably post news, these news events, Great British Pound and USD. Well, really, there's nothing on Wednesday because it's just chair speakers speaking. So unemployment claims, Fed Chair Powell speaks, GDP month on month. So a couple of news events, but there's nothing much this week. So we could end up finding that we don't do an awful lot. We maybe come up and we'll consolidate potentially. We'll wait and see. But in an ideal world, I would like to see this run up during the week. People think we're really bullish. And then once we've filled in this fair value gap, we turn and we maybe get another close for the week below this 50% level. That would be interesting to me. And then the following week, I would be looking for downside. I would be looking to play shorts because that tells me that this level's been respected. So we'll come down into the weekly. Again, it jumps out the charts at me as another level I would be looking at. It's just this. So up here, a 50% level. So again, if we do come up and above here, then that's another level that I would be interested to see how price reacts out of it, if it respects that level. And from a higher time frame perspective, if we think about the high up here and the low down here, so that's PD, premium discount. So of this bearish leg, if we were to come back up into this level to sell from a premium, well, in actual fact, this is a level I would like to see be respected. And it ties in with just about that 50% premium area. So that would be quite a key level if we were to get animated further up to this area. Failing that, you've got this other fair value gap away up here, which is a flick back to the US dollar. So again, if we just say opposites, so here, the low down there, the high up here, 50%, and this wick here is the one that I had to look at. So we come there. So make that 0.5. So again, if price gets really animated to the downside, this would be a key level because you can tap into the discount where we would like to buy from, and we can still respect this sort of level. But that's a bit away, really, especially because there's not much news drivers this week. So if I go back to Euro USD, let's go to 4-hour chart. That week that just passed, this was Monday. So let me just go to a 60-minute chart. That was Friday, Thursday, Monday here. So we had these levels that I was watching. I took along on Monday. It was actually in here, so I was aiming for these relative equal highs, so this high here and this high here, and we turned bullish. You'll see here that's an institutional order flow entry drill in there, bullish. So if I just do IOFED bull, that in there, just where it comes tapping in, that's institutions buying up, and that's a telltale that we're moving higher. We actually end up filling in the majority of this before coming lower again. So it was a bit of back and forth this week. It was quite hard to get a good read on the market, but that's what happens when we've got large news driver events. I didn't anticipate at the start of the week that we would possibly come up into this area, and I was expecting maybe a bit more consolidation, but we did move higher and then we dropped significantly lower, and ultimately we did move higher, but it was from here that I took my trade. So because I was anticipating higher prices, once we'd bounced down into this area at London Open, so we came down London Open in here, we fucked in this area. So look at this fair value gap between here and here. Look at how that's filled that in. Look at the body's respect in that area. So, cool. Just look at it. Body's just respect in there. And then once we bounced out of here and broke this high, I just took a trade. I wasn't waiting for it to come back. I was quite happy because my target was up into sort of this area and I held it. So I think it was someplace in about here. I thought, no, this is just going. So and we were swapped around. How long? Long, yeah. So we were round about there. That went out up here and then held up in this area. But that was the initial target because these were relative equal highs. And that was kind of it for the week. I sat on the sidelines for the rest, just see if I could figure out what was happening. Here was quite another good one actually, and I wish I'd bought it as I thought this is what was happening. So I'll just take this off here. So I saw price had came down into this area. Look at these for relative equal lows again, from there to there, basically. That was, if you look, when I'm hovering over here, if you look up in this area, it tells you open, high, low, close. So the low was 105,215, and the low here is 105,211. So those are relative equal lows. And when I seen this just running these lows, I thought this is way to reverse, and I almost entered, but I thought, no, never mind it. It was Wednesday. I think because my bias in my head was kind of waiting for lower prices, and I did say I wasn't going to buy this week. I was going to be looking for shorts. So when I seen this, I thought this has got the potential to move higher now because we had these. This here was liquidity. Sorry, that there was liquidity. There's a chance that was going to get run. But if we go down into like the 5-minute chart, you'll see what happened in here. So it left those equal lows. Keep the chart like this for now. So it left these equal lows and price rallied again. So people will look at this going, right, that's a market structure shift because we came lower, we've broken this high, but we've left those equal lows. So again, I'm looking at this, and as soon as you see this selling off really sharp to run these equal lows, and then price starts to bounce out of there, I'm saying, right, that was a run, and we're now a way to move higher. But sometimes it's fine just to watch price and understand that, yeah, you were right, but you don't need to play every move. A lot of it is sitting watching price, thinking about things, understanding why they're doing what they're doing, or trying to get a grasp on it. And in actual fact, I'm looking at this, so as I'm still holding a bias for lower prices, this is the sort of thing that happens. So this sort of price action, it rallies up, it breaks this high. Everybody's thinking, right, here we are, we're bullish. That's it. As price comes back in here, everybody's, right, where am I buying, where am I buying, where am I buying? And then without realizing the higher time frame, so this monthly fair value gap, because this looks just like normal price action down on a 4-hour chart. People don't move up the levels and don't understand what's happening from a higher time frame. So if you look at it here, this is what people will see: a low, a high, a lower high. Sorry, excuse me. I've just confused myself there. So what we've got here is a low. If we start here, this is like a swing point. So this is the starting point. You've made a lower low, but then here you break this. So you've made a higher high. And then here you've made a higher low because you've not came down and broke this low. So this is a higher low. Then this is a higher high. This is a higher low again. Okay, this is sweat liquidity. And then here, this is another higher high. So people start getting really bullish. Oh my God, look at this. Look how fast it moved up there. And then it starts to reverse on people. And then nobody knows why. Retail are left thinking, what happened there? We were bullish. What we've also got here is lots of lows. So we've got here, we've got this low, we've got this low, we've got, this is still relative equal lows. So there's a lot of liquidity here as well. So I'll be watching this level. If I go in now to, let's just say, a 60-minute chart, something that I'm kind of looking at is a market maker sell model. So in here, there's a bit of consolidation, accumulation. So if I just mark this up, I'll take here, we'll go there, make that yellow, and then original consolidation, I'll control copy, control V, take this up to here. This is like, oops, this is a reaccumulation. Copy it again. This is another form of accumulation just in here. Okay, so, and there's lows in here, so it's, I'll make this blue and I'll make this purple. So this could be like, I mean, this looks tasty. This here lows, and then this original consolidation in this area, and that you can maybe even take it from there. There is a consolidation area. It's all a form of consolidation in there. So if you look at it like that, then there's the chance here again. We've came up into the monthly area. You can see here we've kind of reacted out of this area. But again, maybe run these highs and then let's see a drop. You've got this fair value gap in here, which if we are bullish, you would want to see this support price. Okay, so if this fails to support price, then on this time frame, it's looking less likely that we're going to remain bullish. Bull. So accumulation, reaccumulation, reaccumulation again. The move up, market maker sell model. So what will happen is we come down, there might be a form of consolidation, we come down, we run these, another consolidation, and then we come down lower than this original consolidation, someplace around about here. So I would like to see that this week, but I don't know if that'll be the case because we don't have many news drivers to get this type of move. So I'm going to watch, see how this plays out. So this is an hourly chart. If I go to 15-minute, sorry, for here. So what you can actually see, we've actually opened and we're gapping much lower. So we'll see what that means. We opened 3 minutes ago. So what I've originally seen here is we've came up, we've created a low in here, rallied up, and we broke it. So in here, back on, so in here, there's a fair value gap. Pull that across. You'll see it gets respected. That's not exactly right because it's a bearish. Now, what's really interesting, if I come here, we're looking at this quite closely here. So you might think, well, this is fine, by the way. See, it's just up above the fair value gap, that little wick that comes up out the top of there. That's perfectly fine. This is still showing that it's been respected. It's ran up, it's come back down and closed below it on a 15-minute time frame. If I go to a 5-minute time frame, you'll see here, we've actually, so when we were coming up, we've got this fair value gap here, which was a bullish fair value gap. So if we look at this, if I make that green, and we bring it through here, so what you'll find is, right, I'm bullish, I think we're bullish, or we've done this, we've came down, we've respected this bullish area, the fair value gap, we've respected it once, we've respected it twice, and then we've rallied away again. What happens with this, if we take it across, this becomes, once we break down below here, that actually becomes resistance. It's an inverted area. So you'll see you've got this fair value gap on the 50-minute. You don't see this fair value gap on the 5-minute, but on the 50-minute, you don't see it, sorry. On the 5-minute, you do. But this becomes a level that then should get respected as well. So you might think, why has this came out of the lines of here, this bearish fair value gap, but it's then using this inverted area as resistance, and then it starts to sell off again. So interesting. It's a bit more advanced, that, but it's worth knowing that nothing much in these markets are random. So that's my outlook. I'm expected to see us probably come lower. Although I would like to see, as I said, us come up, run these highs, this high here, fill a bit more of that fair value gap, maybe close back in below that 50% for the week. If we close underneath this again, then for me, we're bearish, and I'll be looking to continue sells. And my targets will be these liquidity pockets that I've shown here. So these are all soft lows, soft, soft. This ran liquidity, this one here ran liquidity, but it's still a pretty soft area. And when I'm coupling that with my thoughts of a market maker sell model, this is smart money reversal up here, and then we'll start to see it come down. But we'll wait and see. The invalidation is we start closing above this area, the 50%, start filling in the whole of this fair value gap monthly. Then I'll reconsider. So I'm going to stay nimble this week, and we'll see what is on offer. We'll see that 50% of the range is quite tempting. So we'll just watch. We'll wait and see. And if we get the opportunity, then we'll look to seize it, but only once we start to see the things that would warrant us to then look for a trade. Okay. I think that's about it. Yep, we'll see how it plays out, but I'm expecting this to get respected and then come back up. But I'm not marrying that idea, because on the stock market as well, this is normally sort of a bullish end to the stock market, which subsequently means DXY kind of down. But we'll remain nimble and see. And that's about it.